Recent data from the Office for National Statistics indicates that UK wages have continued to outpace inflation for the third consecutive month, offering some respite to households facing the high cost of living. In the 3 months leading up to December, average regular pay increased by 5.9% compared to the same period the previous year, while the inflation rate stood at 2.5%. The UK labour market presents a mixed picture, however. While wage growth is robust, the unemployment rate has held steady at 4.4%, and job vacancies have experienced a slight decline, decreasing by 9,000 to 819,000 in the 3 months to January 2025. Thames Water, one of the UK's largest water suppliers, has secured a £3 billion lifeline from a consortium of investors to bolster its financial stability. The investment is aimed at addressing the company's significant debt and funding necessary infrastructure upgrades to reduce leaks and improve water quality. The deal comes at a critical time as the utility faces regulatory pressure to improve services and environmental performance. Critics, however, argue that this financial injection should have been accompanied by stronger commitments to customer service improvements and environmental stewardship. In a surprising move, the Reserve Bank of Australia has cut its official cash rate by 25 basis points to 3.5%, marking the first rate reduction in 4 years. This decision aims to stimulate borrowing, spending and investment in an economy showing signs of cooling. The RBA's governor stated that the rate cut was preemptive, intended to forestall further economic slowdown amidst global uncertainties. Analysts are now debating whether this will be a one-off or the start of a more accommodative monetary policy stance. Lebanon's government has announced its intention to negotiate a new program with the International Monetary Fund, hoping to secure much-needed financial assistance to stabilize its economy. This comes after previous stalled talks due to political instability and disagreements over economic reforms. Lebanon's economy has been in freefall since 2019, marked by a dramatic currency collapse, hyperinflation, and a breakdown of essential public services. A potential IMF bailout was discussed in 2022, but talks stalled as political factions failed to agree on key fiscal and banking sector reforms. The success of this new IMF initiative hinges on the government's ability to implement sweeping economic reforms, tackle endemic corruption and navigate deep-seated political divisions. Those are your main stories from London at close of business.